Important levels to track with our chartists. We've got Nooresh, Merani and Kunal Bothra as always joining in. And Kunal, it's interesting because we're talking about that stark difference, as Nikunj was saying, between the mid-caps and what's happening with the frontliners. The fact that the move yesterday was purely led by marquee names like Reliance Industries and Infy. What's that indicative of?
Good morning, Avan. So yes, it's a phase of the market where large caps are trying to get their mojo back, as well as get back into the line of outperformance as compared to mid caps. We've seen a whole host of large cap names participate on a consistent basis over the last 1 week or so, beleaguered or underperforming stocks like the IT majors, Infy, TCS, HCL Tech, etc. These stocks have made a very good comeback. There has been a slew of short covering in that pocket. Reliance has made a very good comeback. HDFC Bank also has made a good comeback in the last 3 or 4 days. So on the back of it, the strength is getting reflected as well as replicated on the Nifty 50. But I think one of the other important aspect is on intraday basis, that in this kind of a market where you see the index moving up higher, but then there are those odd corrections which come in between on an intraday basis. In that kind of a scenario, I would believe that slight change in strategy has to be tweaked, because in terms of buying momentum, because if the index opens with a gap up opening, we tend to look out for more breakout trades. But I think in this kind of a scenario, it's always better to try and find stocks which are either on the verge of a breakout, slightly below the breakout levels, or closer to the support point. So that's the only tweak which is required for the index strategy.
Okay, and Nooresh, wanted to understand, you think some more consolidation on the cards, or you think we're going to make another dash to 19,800 plus?
The case has been, we've been looking out for a consolidation, but we've just got a 3-day correction last time from 19,300, 19,600 band. And now we are back to a fresh move as well here. So the case is, till the time the trend is up, you continue to ride on to the move, focus less on the index and be stock specific. So at current levels of 19,700 plus, the risk reward is not there for a Nifty long, but stock specific still there could be opportunities across the board. But the bias is positive. The global markets are breaking out. So the two things which have happened is, we are seeing a breakout in Dow Jones. We are seeing a breakdown in dollar index continue below the 100 mark. So a lot of risk on environment is there globally. And in that case, it would be tough for us to see a correction in a sharper way. So we could consolidate. The only case is now the base shifts higher. We could be earlier looking at 18,900 as a support. Now 19,300 becomes a support. And overall, the trend is up. And even if one of the 3-4 heavyweights which have not done well takes a lead, we could continue higher. So, and a lot of results are there over the next 10 days. That could make the real impact rather than just the momentum globally.
Heavyweights have now started participating, right? And you've been seeing some beaten down mid and small caps as well make a comeback in the last leg of the rally.